like I can't get my head around like how OpenAI can be like a $50-100 billion company, let alone, any of the other startups that are kind of competing in the space. You look at Tesla, on the other hand, and Jeff alluded to this beautifully, where they've got like the lowest cost to manufacture a car, and then they've got the lowest sensor suite in terms of the bill of materials for the actual FSD, what you need to enable FSD in that car. And then they've optimized the chip itself to have the lowest power draw, so that your overall vehicle efficiency in terms of watt hours per mile is like just drastically better than anybody else. And then if you just add the last piece, which is actually solving like truly autonomous driving, level 4, level 5, where like you can unlock the robotaxi business model, then the math becomes really easy. It's like, okay, I already know what my vehicle efficiency is. I know what some comps are for pricing on the top down like pricing model. So then a math nerd like me can go in and just like build a model and be like, oh, this will print money, and nobody can compete with them because nobody can build a car cheaper, nobody can run a car more efficiently, and nobody has a inference chip which is nearly as efficient as what Tesla has. So like it's like very easy to see how significant this opportunity is, and that's why I'm so optimistic. Like that, it's just very clear how this is going to play out, and it has been clear for like 7 or 8 years since Autonomy Day. It's just now that we're finally at the stage where I think the pieces are going to start coming together. But people still are just not believing it, and they're like, all right, well, I'll invest in like, I don't know, Facebook, because like they're investing a lot in GPUs, so those have to be good investments. They might be, but I can't get my mind wrapped around how that actually pays off. Whereas Tesla is like very clear cut and modelable, which I love as an MBA and a finance guy.
Gosh, I'm gonna take this clip. I'm gonna move it to the front because you guys left me hanging when I asked that question beginning. This is what I was saying.
You just got to warm me up. All right, let's have a little conversation first. We'll get into it.
People who listen to the beginning going, Herbert's like crazy optimistic. He wants to get the company to be revalued now when there's no revenue and earnings. And I'm like saying, why is OpenAI worth $50 billion? The company and the product. Don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. We enjoy listening to bears.
You're looking for the red flags. You're supposed to react.
Let's go. Let's get started. Okay, everybody, welcome to Cyber Bulls. We have a special guest today. It's Matt Smith. Matt Smith's with Rebellionaire, which is a brand of Halter Ferguson, a financial advisement firm. And we've got Jeff Lutz and we got Xander Sky. You know, we are watching Tesla transition from a car company to an auto company, right? Autonomous AI robotics company. One of the big topics I want to ask the bulls here is, what are the milestones that you're expecting to see as this transition happening? We're already seeing it with Elon taking a sledgehammer, making some big reorganizations. And what will be the upcoming catalysts? Let's start with you, Matt. Tell us what you're seeing happening to this company these days.
Yeah, so I think milestones is a good way to think about it. This is not going to be just like a binary event where all of a sudden robo-taxis just happen one day. There are going to be little nuggets that get dropped along the way. And so I guess what I'm thinking of in terms of these transition points, one bucket is, what am I experiencing personally as I'm doing my drives? It's kind of crazy how it improves so many things, and then a week later, my attention immediately focuses to, it does this one little thing not too quickly. We really do get accustomed to the improvements very quickly. So, I mean, the big one for me just recently in this latest point update on 12.3 was that I've got the auto park now for the first time. So it's doing that extremely well. It really impressed my kids. That was pretty fun to watch. And so you're just seeing more and more of these kind of building blocks of okay, yeah, they're going to need that in order to enable the robotaxi future. But at the same time, it still does this one merge horribly and is not so great with lane changes. So there's still these little kind of nitpicky things that I'm going to continue to watch and see how they improve. Just to give that level of confidence that we're getting there. So that's on the progression of the technology front. And then on the business front, I think we're going to start seeing that transformation show up in earnings. We had the big news out of China, which I'm sure we're going to get into in a little bit. But, with this free trial getting pushed, there's going to be some non-trivial amount of Tesla drivers who are paying the $99 a month now for full self-driving. And I think it stands to reason that that percentage is going to increase pretty significantly over time as you introduce the technology into more geographies, and as the technology gets better, and just as like the fleet grows and the number of people trying it grows, and they kind of show each other. So I think you've got a lot of reasons why this subscription revenue that's going to be hitting the Tesla's bottom line is going to be building over time. So those are the kind of two different buckets I would think about. I mean, we're seeing already just how quickly the pace of improvements happening on the technological side. And I think it's not going to be too long before we start really seeing the results hit the bottom line on Tesla. And then it's going to be impossible to ignore for Wall Street, I think.
So this transition from a car company to an AI robotics company, do you guys all agree what Matt just spent the last 20 seconds or 2 minutes here talking about is robotaxi and FSD? And is that the first iteration? I mean, that's certainly what Elon is saying on 8.8. But what about the investments in AI, the massive $10 billion investment? What about, the bot? Any other milestones that Tesla could do to transition there even before robotaxi? Or are we all agreeing it is really robotaxi?
I agree with a lot of what Matt went through, and I appreciate Matt being on the show too today. I would say, I think one of the big early milestones is going to be when is this first build deployed that was built with unconstrained compute capacity? Because up until this time, the team said they had constraints on it, and how does the model, how complete is the model in terms of the release that we're driving on today and its ability to train. So I think I'm going to be looking for a data point on that. When does that release come out? Is that 12.4? Is that 12.5? What happens in these point releases actually? It'd be interesting to understand what they're actually doing. Is it squashing bugs, or is there new training models being introduced? So I think that's going to be a milestone of when are we driving a release that, is built off of kind of unconstrained compute capacity. That'll be one mile. The other milestone is going to be feature complete. Like all the features are actually, are in terms of what the car is capable of doing. I think that's going to be another milestone. I think following the compute capacity increase, I think that's interesting. But there's so many other underlying metrics to network infrastructure management, whether it's the utilization, you name it. There's a number of metrics under that Tesla will have and will understand, because it's one thing to have the compute. It's another thing to have it be fully utilized and to understand how much overhead is there. So those are some of the milestones that I would be looking at: feature complete, getting a build with built with kind of more unconstrained compute capacity, and just seeing, what feature complete looks like in terms of the experience, and B, the performance of a build, with greater compute capacity, and what that does. I think the other milestones are around the geographical expansion. I think for the conventional wisdom has been like, this would have to be more of a hard push and lots of regulator scrutiny, and that might still be the case. But I think the tides are starting to turn a little bit of countries or geographies actually wanting to pull this in. So it'll be interesting to see how Tesla makes that case. Finally, Tesla has a dashboard of metrics that none of us see, and they're going to know by looking at this dashboard where the builds are trending and where the product is trending, and then you'll see them make business decisions as a result. I think they saw where the build was trending and they went to $99. They wanted to open up more adoption, the free trial. I think you're going to see more of that, but it's going to be on how the builds actually perform. I'm sure they have a dashboard, and I'll give some examples: interventions, percent of time driving on FSD versus not driving on FSD. I think those would be a couple of important metrics for them to be looking at amongst other metrics. And once they see that percentage, on version 11, for example, I was probably using it 20 to 30% of the time. And now I'm using it probably greater than 80% of the time on my drives. So as that grows, it becomes more useful. And then you can see Tesla making business decisions. So it'd be interesting to see how these upcoming builds with unconstrained compute capacity and what those dashboard of metrics look like. We probably won't see them until they're at a level of performance and stability, or we may never see them, outside of Tesla. And finally, I always have to put this disclaimer. I would not trust the adoption metrics you see that are not specifically spoken to or from Tesla management. I think a lot of people are using a lot of weird, bizarre methods of trying to calculate this, and with subscriptions and with buying it up front and with price changes and with the builds changing and performance changing. I think this is really hard to ascertain, and I would really focus on what is management telling you, and hopefully we get more frequent updates from them.
Okay. And then, so both of you, and then I know this is what most people are saying, right? In order for Tesla to transition from a car company to an AI company, you need to see earnings, you need to see revenue, you need to see a product rolled up. I agree. I understand that. I'm going to give you guys 2 examples of what could be other milestones. And tell me, they might be small, they might be nothing. But the first one is, you guys heard about Grok, or not Grok, but voice assist coming to Tesla's cars, right? That's something that Green found that's in the code that could come. What if this voice assist is really good? What if it transforms, how you can actually control and interact with your car? It kind of replicates what's happening with the LLM models. You got ChatGPT in the car. And what if that increases the FSD uptake? And then that's just shows you just that alone, people really want that. That's, one example. Another one could be the bot. We know that we're not going to see revenue on this until late next year, perhaps. But what if they dropped a demo or a video, right, of the bot in the factory sometime maybe later this year, and then they drop this, and then they show that this is a really super incredible experience where you can actually speak to it, you can actually tell it to do tasks, I could do tasks. This really is a true example of a real world AI use case, AI from the computer and put into a physical, useful machine product. Could either of those 2 be milestones that could kind of change the investor's mind? Why don't we start with you, Xander?
It's very speculative to try to figure out where the consumer's going. I think that's best left for Tesla. I do like the idea of talking to the car with more of are you offering examples of controlling the speed, or are you thinking in a robotaxi environment you're going to communicate to the car to slow down or to speed up or take that turn? Is that where you're going with the first part of your question?
What I'm trying to get to is, maybe you don't even need to wait for robotaxi. Maybe just some incredible integration of an AI tool inside the car, just the way it is now, could transform the experience.
Yeah, I think it's, I want to be able to talk to the car. My Cybertruck actually doesn't. The mic is not working from the factory, so that's good. That's going to get fixed in a couple of days here. But not being able to talk to the car after you've done so for years, it is you are spoiled by it. So I think it will contribute to desirability, but I don't think it will have a meaningful impact on the take rate of FSD.
All right. Yeah. I'm just looking for other things, because it sounds like it's pretty clear from everybody here that it's robotaxi. That's the only way that Tesla can transition.
I think part of what I was getting to with the take rate though on FSD is that ADAS is an intermediate step on that's going to happen and be really impactful before we get to robotaxis. So right now, a lot of the Gary Blacks of the world and the Wall Street analysts, they're like, I'll assume some take rate for full self-driving, and maybe that increases over time, and I can add that to my earnings estimates and do a forward PE based on that. And so that is a very real, I think, kind of interim step that will be helpful for Tesla. So I don't think it's all robotaxi at all. I think FSD on its own is going to be extremely valuable, even if you said that robotaxis will never happen, which I don't believe. But if you assume that, it's still going to be highly valuable. I mean, I would imagine the take rate ultimately would trend well over 50%, at least at the current pricing level, just because it's so good. And it's the sort of thing that once you've tried it, you really don't want to give it up and go back to the old way. So I don't think it's only robotaxi, but I would say I do agree with you that bot and some of the stuff that they're doing on Optimus could become a bit of a catalyst. Elon said on the earnings call that he thinks it'll be doing some useful work in the factory by later this year and selling to customers by next year, but before the end of next year. That sounds slightly aggressive to me. I think that might be a little bit of Elon time, but overall, I do think the progress that they're going to be able to continue to show on Optimus could definitely be a catalyst, because right now I think it's at the state where like robotaxi was, maybe robotaxi is probably for most analysts are just like, maybe that's a big deal, maybe they can figure it out, but not really. I've been on these finance spaces with some Tesla skeptics, let's say, and they're talking about competition in the humanoid bot market and how like there's so much competition and like Tesla's like never going to make it because you got like Figure and all these companies. I'm like, guys, there isn't a humanoid bot market yet. Like, why are we talking about competition? This is a new market. Like, it's just it's hilarious to me that there's this totally new like TAM that nobody really knows how to like figure out how big it's going to be and like what the use cases are. But people are already saying like, oh, like it's just too saturated and like Tesla's gonna like lose. Like, this is
hasn't even started yet.
Way too early to be making comments like that.
So the reason I'm saying what I'm saying, okay, because bear with me a little bit. I get that this is the right answer, right? It's robotaxi that will transition Tesla to an AI company. Elon has come in, become wartime CEO. He's making massive changes. You can see it happening in front of our eyes, right? $10 billion in AI spend, laying off 10% of staff, completely laying off certain divisions of staff, investing in the new vehicles and making that change. Even just the concept of, 4680s are very important, but not the priority per se. It's okay if it's delayed because the world has changed. You can see him coming in and physically turning Tesla into an AI robotics company. He's been repeating those words for the last 3 months, 6 months. So yet here we are all just thinking that, he did say robotaxi, that is the priority, but this is a change, organizational change in the company. And so there's things that's going to come out of this. And he's talked about in the earnings call several times, this notion of, distributed computing, right? The ability to take the inference compute that's everywhere out there. What kind of business can come out of that? Now, much of this could be the future, but he's setting the stage today. So there might be something that comes sooner than we realize that will change the minds of investors and for people following the company to really make that point. We are an AI company.
Yeah, no, I agree. I was even last year, I was envisioning like as soon as Grok was released, I'm like, wow, could this be like a Knight Rider experience in your car?
Yeah.
Could this stuff be coming? Even Elon's been commenting on it early.
Yeah, Elon commented to you. Yeah.
Yeah, and I do think that I think that is part of the surprise of a Tesla robotaxi experience. I think the robotaxis today are very expensive. They're very kind of mechanically, like they look kind of like bulky and weird. And I think what you're going to get with the Tesla robotaxi is something sleek, something mass reproducible, and then some surprises inside. The Grok integration, I think, is going to be part of the deal. I think the car is going to actually have a personality. And I think the whole experience itself is going to have a personality. But this is us kind of sitting around and guessing. Let's see what they actually unveil. I would coming at this from just a perspective of doing kind of prior launches of technology in the past, I would guard against a couple of things just really quick. One is, and I've been chief quality officer of a company, and I understand there's a little bit of confirmation bias that you can have in testing of a product. And I do worry a bit about our testing of FSD as longtime kind of FSD testers. We have a bias of like how this thing has performed at kind of V10 and V11 and like, wow, this is so much better. It's great. I think we have to start a little bit from, is it kind of, do I ever have to touch anything in the vehicle at all? Right? Because there's critical interventions, there's non-critical interventions. So I think that lens kind of needs to go over it. Because if I start putting in non-critical interventions, there's still a lot of stuff that needs to be worked through on FSD, but it's so much better. And then the other thing on the bot, it's one thing to be able to do the task. It's another thing when you overlay accuracy and speed at the same time. And by the way, this is with anything. This is bringing up any kind of robotics, and even non-humanoid in the factory. When we train robots in the factory, like we start at a low rate and probably wider accuracy targets. And as we dial that in, usually, that last mile, you encounter a lot of different issues and difficulties. So I think that's still ahead of us on bot. I think Tesla's made tremendous progress on bot, come from what they started in February, I think, of 2022, what we saw in September 2022, where we have today is like unbelievable progress. I would just be mindful of that last mile of getting a bot to do useful tasks at rated speed with very high, greater than human or equivalent to greater than human accuracy. That piece is going to be a difficult thing to overcome, but they will overcome it. It's a question of when. Sorry to be a little bit of a downer there, but these are some of the things I'm thinking about as I think through it.
Yeah. Well, the company's definitely going through this transition. There's organizational changes, and there is this move to, robotaxi, just, the biggest example. So we talked about milestones. What about the Tesla stock, right? Again, is this the answer? Simply still, Tesla stock won't move at all until you've got actual revenues. And then I think the number some people were saying is 15% of revenues needs to be other than car before it's going to be recognized. The frustration I have, of course, is that that's not what you see with the other AI companies. They don't have massive revenues that's, shown directly related to AI, and yet they are given massive market caps because of that. And then arguably, as you heard Kathy Wood say recently, Tesla is the largest AI project in the world, real world AI project in the world. And then Elon repeated it and retweeted it and said so as well. So yes, we need to wait, but also, I think this is truly the truth, right? That is the case, that it is the largest AI, real world AI project in the world. Do you guys disagree with that statement?
No, I think, you're seeing the company, make changes as you were talking about. And I don't think it's going to take till, 2026 to see the impacts, especially on their earnings, right? If they're cutting back the workforce and deploying it and raising capital that they can deploy into compute, I think you're going to see, the biggest, that's their goal. And, they're executing it, and so I know people don't like it, but they're looking to spend money on becoming a software company, not just a hardware based company. So it seems like they want to be capital,
right?
Spend the
Jeff,
capital onto that.
Matt, what was your calculation, Jeff? You were telling me of your expectation of 14,000 people being laid off, 10%. What does that translate to on a per year basis?
I mean, it depends. I mean, I think people realize that resources in the Bay Area versus resources in China, there's an engineer in the Bay Area, engineer in China, there's a big differentiation. But what people don't realize is people just think of it's like it's their salary. No, it's their salary, it's their bonus, it's their health care, it's all the beneficiary items that they get as an employee. It's a kind of the all-in cost, and it could be on the high end of the scale $400,000. It could be low $100,000 for an engineer. So that'll vary worldwide. But I mean, if you're talking 15,000 people, let's say, I mean, it's easily. I mean, it could be easily $2.5 billion, if not more. So I think we need to see the breakout of that, because there's some that's factory personnel. There's some, there's direct line labor, then there's technician labor. Those are two different kind of pay tiers in a factory. So you kind of have to look at like the composition of what happened. But in any respect, what Tesla did is they deprecated labor and probably some capital. And so on the other side of this, they should have greater efficiencies on the other side of it, and should impact COGS. It should impact OPEX pretty significantly on the other side. Depends if they just go and immediately reinvest it on the OPEX side in the compute or not. But the COGS will invariably be impacted. If they can get more output this quarter, which they should be able to blow through a lot of inventory and have those reductions start rolling off in June, where they take a one-time charge and they can kind of carry it forward. I mean, they'll have I think a pretty significant impact. The other thing I want to say about this is I don't think other companies can move as quickly as Elon and Tesla is. So first off, they're pretty flat in their organization structure. So he's got a wide number of direct reports. And then, so I think like some of the movements and things that he's doing and the rate of change, this is all around adaptation. And he's a visionary. He's trying to like get ahead of like what's happening. And I talked about this too, I think on an earlier space. Tesla, all of their cycles are kind of moving a lot more quickly than other companies. They actually have much lower network latency on their inventory, for example. So they see sales trends and they see, they see sales trends early. They can act early. They can make modifications early. They can make more rapid modifications, whether it's pricing, whether it's promotions, or whether it's taking down inventory or adding inventory. They can react more quickly to things. So I think Tesla was a little bit of the canary in the coal mine of what they've been doing over the last year with their strategy. And I think they're going to react much more quickly. I think Elon can transform. Back to your original question, maybe one question ago, Herbert, I think it's pretty rare for a company that, right now, a lot of their revenue is auto, that they can transition their personnel, their headcount, their OPEX as quickly as Tesla is. I think that's a very unique thing. I think the other companies are really struggling with this because they've got an ICE business kind of wrapped around their neck, weighing them down. They've got tremendous debt and they've got obligations that they've got to deal with. Or Elon can just come in and say, nope, change. And I think that's going to pay off. If you're an investor, you want that speed. You want that speed you want a visionary CEO. You want speed in decision making, and you want to see speed in actual action and execution. And you're getting all three. It's not without risk.
Yeah.
There's risk involved, but you want what you're seeing here. Actually, again, no disrespect to the people that are impacted.
This is where you're leading me to, right? So the topics were TSLA Catalysts, the milestones, and I wanted to talk about the Elon effect as well, right? So when people say that, oh, be careful, when Elon says the bot's going to be sold next year, that's Elon time. And he's done that many, many times. And he himself has said that he's very optimistic because he's trying to move the team to accomplish an incredible deadline. And that's how you get them motivated. And sometimes he miscalculates. Absolutely true. Okay. But the Elon effect on the organizational change, that's not Elon time. That's not 2 weeks. You know what I mean? Like 2 years. That is now. He makes these changes. He gets rid of departments and he's able to, like you said, reposition. And that's why I'm saying that this transition to an AR robotics company, he's come in, he's wartime CEO. He's taken care of certain, reinvestments, right? $10 billion in AI, really changing, approving a warehouse, a data center in New Jersey, making decisions about Mexico, Giga Mexico, slowing that down, signing deals with, dignitaries. All of this is to move the company forward to an AI company. And bots a priority, robotaxis now the priority, and we're no longer a car company. Okay. And I'm just saying that when he comes in and does these changes, it's fast, it's big, and it's quick, like it's, it will happen. And yet here we are going, no, we won't become an AI company until we see revenues from robotaxi, which is 3 years from now, until it hits maybe 25%. What about Dojo? I mean, this is a Dojo's. I know it's very different from NVIDIA, but it's a compute company, and yet no value at all applied to it.
Well, what do you want the multiple to be? I mean, it's pretty high. So it's getting some value. The question is like, do you want it to be 100, 200 until they actually start putting the earnings up? I mean, that's one question to ask yourself. And the other question is when, what's the latency from the moves they're making to it actually starting to impact EPS? I think that's what some of the analysts may be thinking through. And I think they're undercalling the impact of some of these changes that Elon is making on OpEx. I think they're undercalling the influence Tesla has on COGS. Everybody was surprised on per unit COGS in Q1, and I believe Tesla has the kind of leverage over their supply base that is really not well understood. And I think a lot of it is with the new product portfolio acceleration, like the number of new projects that are ahead for Tesla and the size and scope of them are greater than they've ever been before. So when you're a procurement professional and you're setting up these business relationships, you sit down with these suppliers, you say, look, this is what's ahead of you. If you want a ticket to ride, you're going to have to help me on 3 and Y. You have to help me on Cybertruck today. Like, I need help today. I need you stretching today. And I don't think that's well understood. And that's why there's a little bit of a surprise on COGS in Q1 to favorable, and even with the lower volume. So I think that's going to continue. I think the OpEx improvements are going to continue. And so I think what the market's kind of looking ahead is like, what is on the other side of, are they going to start growing unit volumes again? And if they are able to do that throughout the latter half, again, I'm not expecting some 2.2 million type year at the end of this year. No, if it's just something, a decent number above the 1.8, but they're successively regrowing unit volumes again, doing it in factories now that are a little bit leaner versus the prior to the reductions that they've done, and then all the OpEx changes. I think that's what could be getting missed. That may be a little bit of near-term alpha, but right now, all we've had is we've missed 3 quarters of EPS, I think, in a row, and we've had successive EPS declines for over a year, and that's 80+% of the analyst community. Like, that's what they're looking at. And then there's a small kind of fraction that's looking at the AI piece, that's looking at kind of more of like what this could mean and more trying to quantify it. So I think that's what could be missing here.
Matt, you want to jump in?
Yeah, I mean, I think Jeff is right to kind of caution. Honestly, I think there's a much higher probability that we're flat or maybe even down this year on volumes than other people might be suggesting. I know Elon said in the call that, yeah, they're going to do, growth off the 1.8 that they did last year. But I mean, if you just look at how significantly they missed on deliveries in Q1, that means they really need to outperform in each of the subsequent 3 quarters relative to what they did last year. Otherwise, they'll be down. Preliminary indications on demand in Q2 don't look super strong to me. So I think it's reasonable that we are probably down again Q2 year over year. Now, it's probably too early to call. I mean, we're only 1 month in. But, I think we need to be very sober with the fact that there are like near-term challenges, and that's why the stock is kind of trading where it is. But I think it's possible to both say, like, hey, like Elon maybe is even being too optimistic about delivery volumes for 2024, and also say the stock is, wildly undervalued in my mind because they've got this other stuff kind of coming down the pike that is going to be so much more valuable. So I think the way to do this, from a first principles analysis, is to, look at, what is the kind of semi-step, which is very high, not very high, but like reasonably high probability of estimating, what 2026 or 2027 volumes are going to be, and how big of a role the FSD software plays in that. Do that kind of build up independently, and then say, okay, what does that give you in terms of a PE growth? Because when you start looking at like the cumulative fleet deploying and then the cumulative take rate on the cumulative fleet increasing a little bit year over year, that's how I think we're going to get to the point where earnings per share is really growing again in a meaningful way. But this year, I just don't really see it happening in a very meaningful way. So I think being like sober and honest about this kind of near-term challenges, while also saying, the longer term looks extremely strong, and just looking at what they're doing technically, it makes a whole lot of sense. I think that's why we're the cyber bulls on here. But that doesn't mean there couldn't be a lot of short term weakness. I mean, after this huge spike we've seen in the last couple of weeks, we've had a lot of clients get like extremely excited and want to kind of layer on risk, and we've been trying to be reasonably optimistic while also saying like there's like, just because we shot up above 150 doesn't mean that there's no chance we go back down there again. So one of the things we're trying to do is to manage risk for our clients' portfolios, who at the first sign of some good news, that they want to like back the wagon up and just layer on the risk. So that's I think just being prudent and making sure you can manage through what might be a rougher 2024 than maybe some bulls are expecting, I think is the right way to handle this, so that when we get out to the out years where this stuff really starts to hit the bottom line, you're well positioned to take advantage of it then.
I think you should tell your clients to just note the color of my glasses. When they're green, it's risk on. When they're kind of more neutral gray, it's kind of like, I'm not sure. I don't have a red pair of glasses, but anyway, and I'm not saying it's risk on. I'm not giving any advice on this call. I never do that.
Yeah, not financial advice. I should clarify, because I am a financial advisor, but none of this is financial advice.
Matt, would you guess that we've reached kind of like a sentiment shift location? You mentioned that you don't. There's obviously a probability that it can go back down to 150, but for those bottom seekers, are you able to kind of share your opinion on is like Jeff was guessing, it's sentiment has shifted, and we bounced pretty hard. What would be a catalyst that would cause a drop in the stock price?
A drop. I think that the big thing that we're not out of the woods on yet is what I just said on deliveries. So I think there is a somewhat big disconnect between the view that Jeff painted of like fully expecting meaningful growth over last year. I don't know what do you think, Jeff? Maybe 1.9 million, something like that. So like if that's the kind of expectation, and then we get another print that's like, I don't know, 410,000 deliveries or something like that for Q2, all of a sudden even hitting 1.8 becomes extremely hard. And then the kind of scale, the efficiencies of the factory, all the stuff that Jeff was talking about probably gets eroded a bit by the fact that you've got lower throughput, which makes your factories less efficient, and you're starting to build up inventory, which isn't great. So I think there's still a very real possibility that we kind of are in that sort of scenario. And so when we get the print, or if there are indications before the production and deliveries report comes out that, hey, demand is still like way softer than we'd like, I think that's the sort of thing that could get us right back to where we were not too long ago.
I think the big one is Elon and the annual shareholder meeting and the uncertainty of his position. That's the big one that's holding the stock from going up. It could be the one that's going to make it fall the most. My point has been that I totally expect that we're going to do very poorly in vehicle deliveries this year, worse than what Elon is saying. That's absolutely, you're right, Matt. That is what we expect. I'm not saying I'm not saying anything that's all rosy. That's why I'm having the conversation about what is Elon doing about it? And you can see that he's doing some massive organizational changes. He wants a company to become an AI company. Now, it could be that everything we're talking about, robotaxi and bots, are 2026, 2027 stories, and then 2024 and 25 are just dead years. Because this transition takes multiple years. I'm trying to figure out, is there signs to say that this transition won't take this as long as we all think, that there are other ways that this can be shown because of Elon, right? When Elon makes a decision like this and he focuses and he makes changes, it is fast, those changes.
Yeah, so I wanted to kind of touch on that point. Well, you were talking about that before. I was just pulling up the Rivian report just for comparison.
Yeah.
I think we're so spoiled by how efficient Elon is, and it cracks me up that when Elon goes on this wartime CEO mode and like starts dropping the the axe and the let and hold apartments go, people are like, oh my gosh, Elon's lost his mind. Like this is so bad. But like we've been through this so many times in Tesla's history. And what we have is this extremely lean organization that is able to take advantage of this operating leverage that is just second to none. I was doing a quick comparison with Rivian, like I said, and the Tesla's operating expenses, I think their research and development is around 2.5 times, it might have been 3 times higher than Rivian's, and their general and administrative expense was a little bit more than 2 times. Meanwhile, Tesla's deliveries are about 30 times higher than Rivian's. So like how efficient Tesla is being is just wild. And I'm sure you could do the same thing. Like look at, I don't know, GM and Ford's operating expenses, look at their R&D and what Tesla is able to eke out, like essentially an entirely generalizable AGI for driving where like they can basically just roll it out in China now. They're working to roll it out in Europe as soon as the regulators will allow, because they figured out how to do left-hand drive as well as right-hand drive. Like on top of Optimus and developing that whole thing and 4680 and all these crazy product dojo, like they're developing so many things and they're managing such a massive global organization with all the service centers, with all the superchargers, way more scale than Rivian for like not a very significant premium in absolute dollars and a very like significant discount on like a percentage of sales basis. So we're just spoiled with how efficient Elon has been as a capital allocator and as a business leader to be able to make these pivots over time. And so it just, I think we need to not freak out the way I've seen some people do on Twitter that like, oh my gosh, like letting go of the supercharger team, like that's, I don't know about that. Like, like to have this level of efficiency, it comes at a cost, and I don't think we are well served to just kind of question it or think it's a bad thing when Elon starts getting the axe out.
Yeah, I think, yeah, I agree. I think it's okay to question anything. It's another thing to kind of assert, like, you don't, like, if you're not on the inside of this operation and you don't have the vision that he has, you don't have the data that him and probably his staff have, we honestly, we don't know. And if you, it almost becomes kind of silly to think that you look at a decision, you're outside of the company and you think you know more than Elon. Like it's just, it's honestly, it's a really, put any company and any CEO again, but you can question, it's okay to question. But I mean, there is kind of a history, like as Matt said, of really efficient capital allocation and making these big moves very quickly. So, but it's kind of silly. Again, it's okay to question. To me, I'm not this thing of like he can never be questioned. But it's another thing to assert and say, well, it should have done X, Y, and Z. I'm like, honestly, you don't know. And sometimes these decisions are made, they're not performance related. Sometimes they're just fundamental disagreements on the direction of the company, and the executive is asked to leave. It happens. These team members will do well. Kind of, they'll probably get soaked up wherever they go. But I don't think you get this kind of decision making. I think he's looking 2-3 steps ahead, and I don't think you get this anywhere else besides at these companies. Same with SpaceX as well, and his other companies. The other comment I was gonna make, and I think again, I've made this comment on multiple shows, but I think it's worth repeating. I think analysts fundamentally gloss over and miss like really super important points. And I hear even people on TV that are supposed to be experts and they kind of gloss over it. Like one person said, like Tesla will be the third robotaxi company in the United States. And meanwhile, the first two could be insolvent as standalone. But like that conversation is not had in the same breath or context. It's more of like, as long as you have infinite funding and you've like GM, I guess, has invested $11.5 billion. They lose a couple billion a year on Cruise. And now it's been shut down. It's just starting to restart.
And yet it
can be insolvent. It can be insolvent, but physically out there. But that's like quote unquote competition. And it's like, we can't even look at two variables at the same time, which is like scale and economics. We can't look at those two variables at the same time and make a conclusion. One's a zero. If you multiply if they're basically insolvent, but they actually physically have cars out there, but there's no business plan for this to ever work, I think that's a pretty important factor. But it doesn't come up. These operated robo taxis in China, it's just interesting if we had real analysts that really went into the detail of the ability to scale and then scale profitably and to really understand that. I just think it's fundamentally missing.
Yeah, love it. Love it. What do you guys, we were talking about superchargers. And so initially, my initial reaction to this was that it's Elon cutting layoffs and putting the money where it needs to go, which is AI as an example, right? Buying more chips and moving the company that way. We don't need the superchargers. It'll still grow, but we don't need it for the next couple of years because of the flat growth and not only Tesla's volume of deliveries, but also all the other electric vehicles in the US. Then somebody came up with this rumor, which is, or just, theory, I guess, which is that as if you're going to go all in on robotaxi, you'll want to take the existing superchargers and fix them, add them so that you can have the wireless chargers there as well. And so instead of growing, expanding, and keep expanding superchargers, we need to take the ones we have now. And, he called it increase uptime, but also maybe change it so that it's capable for robotaxi. And then that's the one part that I go, okay, actually, that might actually make sense. What do you guys think about that theory?
I'm skeptical. I think there's a lot of problems with wireless charging. It's less efficient than plugging in, so you've got a higher cost to charge. There's issues. I mean, if you have to actually dig up all the different parking spots where you'd have this and have the charging underneath, the further away you are from the battery pack, the less efficient you are. So if you were to have it as some actual mat that just lays down on top of the concrete, then you got issues if it rains or freezes over, or if you've got to fix it, that's can become costly. So I just think it's actually operationally not as efficient as people might think to do that. I think that the more simple answer is it makes sense to really be expanding superchargers when you're growing your fleet like crazy. But when your growth expectations have come down, all of a sudden it doesn't make sense to be expanding superchargers nearly as much as you had been planning for previously. And then not to mention the cost pressure, and I completely agree with you, all those reasons. But I think wireless charging is not the panacea that many people think that it might be. And I also think there's ways, I mean, if we could just imagine that a flip was switched and robo-taxis were just enabled right now and we had to manage the existing supercharger infrastructure, I think there's ways you could get that to happen. I mean, you could have a rider get some lucrative credits just to sit and to actually physically plug it in or something like that. You can just make it the responsibility of the fleet operator. Say listen, your car is going to come back to you after it finishes its last charge, where it has enough charge to finish that route. Then you need to either plug it in at your house or go take it to a supercharger, and then let us know when you're done, and we'll put it back. We can put it back into the fleet for you. So I think there's kind of soft ways that you can handle this that would be more cost effective and easier to implement than trying to retrofit or roll out a brand new wireless supercharger network. To me, that seems like a bit of a stretch.
Mm-hmm.
Yeah, I do think it's being flexed up and down with the fleet. Sorry.
Go ahead.
I do think it's being flexed up and down with the fleet. And I do agree that wireless has trade-offs. I do think it's the future, though. I think, things will continue to improve in terms of efficiency, but there's definitely trade-offs. And final thing is just there's studies out on kind of the electric scooter business. And there was tremendous investment. If you remember this, Bird and Lime and some of these other companies, maybe 5-7 years ago. And one of the critical things that crushed the unit economics was the management of charging, which was collecting these scooters at the end of the day, somebody be throwing them in a truck and then bringing them somewhere and gang charging them and then redeploying them. And where do they go after that? It was one of the things that crushed the unit economics. That's why you see far fewer of these and far fewer companies that are doing these scooters, as the charging side of it really hurt the economics.
Interesting.
Yeah, I was going to ask if perhaps Tesla is now that NACS is ubiquitous and the other companies, is it possible that they're expecting, or there's a deal in the background of them growing the network? What do you think?
That is my a big theory, is that why are we doing all the work? Why is Tesla spending the time and money? There's already big deals with British Petroleum and other large gas stations in Europe and even in the US, where they're going to roll out superchargers in their gas stations, and then but just buy the chargers directly from Tesla. Now Tesla has automated the creation of these superchargers. It's, they were talking about how quickly they can now, and how complete it is now, and just really just plopped in. And so this entire team, whose goal is to try to negotiate and find locations, maybe it's, wait, why are we doing it this way? Let's find these partners and let them, who, they can ask us to, hotels and McDonald's and others, and let's put it there.
Yeah, the other thing I was going to ask. Go ahead.
Oh, sorry. Go ahead, Xander.
No. Go answer the question.
I honestly didn't understand like what was transpiring last year. I mean, I can kind of look at the underlying economics of Tesla opening up the chargers and getting greater utilization on them. Greater utilization, take down fixed cost. Their cost structure improves. Their revenues grow. I can see all that. I get it. I think it makes sense. But, Ford and I think GM were on the record of saying like they're literally cutting hundreds of millions of dollars of CapEx in terms of investment in charging. So they cut like what they were going to add to the charging network. Now it would have been more for Ford and GM only. They cut that spend and they redirected it elsewhere, or they took it to the bottom line, whatever they did. I don't know why, like, that doesn't seem right, doesn't seem fair, and doesn't seem appropriate from a business perspective in terms of what Tesla should be doing. I think, this is one of the things, like, it should almost be a little bit like NATO, but like better, like maybe more well managed, of like, look, a percent of your CapEx should be, if you're in the EV business and you're deploying vehicles, like there should be some percentage you're spending on improving and growing the network. I never understood why it was being gifted. Again, I understand the utilization side. I understand increasing revenue, but I think there's some holes in the approach where these other companies just like, hey, we don't have to do anything now. Tesla's giving it to us. It seems but it seems like there's an opportunity for Tesla to maybe get something on the other side of this that they haven't been getting before, but it's hard. It's a hard thing to say.
This could be part of the transition, right? Because initially people were thinking that the revenue you're going to get from the superchargers is going to outweigh the cost of implementing this, and imagine how much money they're going to make. But Tesla can make way more money on the bot, on the robo-taxi, on the energy. Superchargers, it's a great business, but it's not that great compared to all the other opportunities. And so this is that transition. Let's put our money on the things that are going to be huge. If bots work out, and I'm talking 5-10 years from now or even longer, why would you even make cars at that point? Now, robotaxi, sure, robotaxi and bots are pretty decent businesses. I mean, they're probably the best business you could ever have because they're recurring revenue. But if you were just selling a car and getting a one-time revenue, why would you do that if you've got these two massive businesses, right? Things change. And now this is where you're focusing on the right businesses that you should be focusing on.
Yeah, I mean, even if you could sell that vehicle for like a 10% profit, it would just make more sense to make that vehicle like a Tesla-owned robotaxi and get a higher profit that way. So I agree with you. I mean, I think the goal is to disrupt personal car ownership, and I think that's likely going to happen. Maybe I think it would be many, many years, like well over a decade before Tesla actually stopped selling personal vehicles. I just, the amount of time it would take to actually turn over the whole fleet and like get people to like give up on car ownership. And like there's tactical, like personal reasons too, that it's nice to have your own car, like having car seats, for example. I've got 6 kids, and like like getting that in, like for somebody to like take my whole family somewhere else, like we're not going to do that with a robotaxi, because it would be like a 30-minute ordeal to get all the car seats in and like adjusted the right way. So like there is a legitimate case for personal car ownership that's going to stick around for a while, but it would and should be more costly than, just hopping in a robo-taxi that can undercut on a total cost basis the marginal cost of driving an ICE vehicle. And that's, I think, like a wild future that I don't think is adequately appreciated, just how drastic the economic disruption is going to be.
Just trying to imagine in my head, what kind of vehicle do you have? You have a van, six kids plus 2 of you. That's 8 people.
Yeah, we have a Ford Expedition that actually fits everyone. So it's got like the 2 bench seats, so we can get the 6 kids and the 2 benches in the back, and then my wife and I up front. But yeah, one more, and I don't know, we got to get like one of those weird vans or something like that. There's no EV out there that can seat 8 yet. So, if Elon wants to fight population collapse, I think he should strongly consider an 8-passenger EV.
I am also contrarian. Everybody seems to think that the first robotaxi will be a 2-person vehicle. The vast majority of rides, 90 plus, is a 1-person, and the next 5% is 2 people. No, this is a robotaxi. It's going to be enough to fit 4, but if 2 people or 1 person comes in, it's going to be a luxurious entertainment experience. And you need the space. You don't want to be tight and stuck in a little car. You don't need that anymore. You got lots of space. I still think you don't need to stick to a regular vehicle design. They will make a van that will be able to fit 8 people. It's going to be the shuttle that you're going to use for the. In fact, it's in the master plan part 3, isn't it? It says multi-transport, right? Vehicle.
I think so. And he's also talked about like a public transportation variant of this too, which presumably would seat some more, which I would think if you're going to want to like disrupt, I don't know, transportation in Manhattan, you would want something like that can fit, I don't know, 10, 15 people potentially and manage the city streets that way. So I think there's going to be a lot of different variants of this. But that's the overall economics are going to be super strong, and like the actual tactics of how does it look and what's the rollout is less interesting in my mind, or at least it's that, even if you predict it right, it's such a minor detail in like the overall like hey, the valuation is still like going much higher than where we are right now, and so the individual form factors matter less, although I do think for the overall mission they're super important to make sure we're
that's
getting
my
all
point.
those. Yeah.
Why I think a 4-person, like, why do you need a 2-person? Because of cost, because, I want to create a compact car that's really affordable to make, like reduce cost. But then the revenue, the margins you're going to get is so incredible that it doesn't matter if you build a 4-person car and it's very, very expensive. That car can cost you $60,000 to make, and your profitability is still through the roof.
Yep.
Yeah, when you think about when you're making an automobile, the smaller the automobile in size, actually, the more challenged unit economics are. You get consumers sometimes perceive a greater value per dollar based on the mass and size of the vehicle, but those underlying material costs and assembly costs actually don't change as much. So if you can have kind of part count neutral decisions where it's just kind of a larger part, you can charge more for that vehicle and that product. So the unit economics are actually more challenged the smaller the vehicle you get. The bigger the vehicle, you have a little bit more leeway because consumers are willing to pay more for the space. Anyway, interesting.
Yeah, no, that's good. So
tidbit.
let's talk about China's significance. How important was this deal that he made in China? I just had a big, long discussion with Larry Goldberg about it. And, it's this idea that this is Tectonic. This is massive. This is a big deal because it sets them up for licensing. And once you get one licensing, he believes that it's going to be very much like the NACS standard. It's going to be, everybody's going to do it. Like, you can't not do this. And then it'll be more. That part is obviously a little bit of a stretch, but meaning to say that all of a sudden Tesla's business isn't just robotaxi in the US, it's robotaxi globally, and then you're going to have even more partners that's going to jump on board, and so that it becomes basically it's 10x from what the original sizes of the business. What do you guys think is the significance of what you just saw? I mean, it's obviously the answer is it's early. It really they didn't really do anything except for like, FSD maybe approved there is all they said. But,
Yeah, I mean, I can start. It is significant. So first off, you want to show face, and you want to be in the good graces of the leadership there. That's important, because if you're on the other side of that, there's a tremendous amount of resistance involved in doing anything physical or commerce in China. So that's a really important thing for Tesla, that they're on the right side of that. I think the scale could be significant as well. One of the things that, and I mean, I I know a number of these players actually in China pretty well in terms of how they think. And when they they've all bought Teslas and they've all physically torn them down. And they look at what they're doing from an autonomy perspective. They look at the computer in the car, and they look at the optics. They look at everything Tesla's doing. And I would be hard pressed for any other vehicle maker in China that is putting, optics and sensors on their cars for self-driving. They probably don't have a solution that's lower in bill of material cost and lower in assembly cost than what Tesla's actually come up with per vehicle. And so I think that's going to be attractive to them. I think the work being done, the kind of the network infrastructure in good graces with the local leadership and the local partnerships. If a lot of this work can be done and they don't have to invest the R&D, they won't want to invest the R&D. The question, the all questions going to come down to is the economics between the parties and how that would work. But I do think that they would be willing. They have great amount of respect for Elon and for Tesla, and I do think that there would be some interest there. Now, there's a lot of local robotaxi companies in operation in select cities. It's hard to understand like what their economics are. Are they doing well or not? But I think it's suffice to say that I think the first FSD licensing opportunity would be from a Western company. I think the proximity piece is an important thing in terms of where the Tesla autonomy team is physically and working with the team. But I could see a fast follower in Asia pretty quickly, and I could see pretty wide adoption. Again, the reason I could see wide adoption is because of the actual economic stack of the solution. It's a lowest cost. I challenge anybody to say like a lower cost of implementation, both on the client side or the infrastructure side. Is there a more efficient solution out there? Raise your hand. If there isn't, they're actually going to naturally gravitate towards what Tesla is doing. The first thing they'll probably try to do is copy. And the second thing they'll realize is like, well, you can't readily just copy this stuff. Like, you're going to have to do a partnership with Tesla to get access. So I could see it happen. I'm in alignment there.
Do you guys think that the competition between like U.S. and China can, and then China approving it, can cause regulators in the U.S. to kind of open up the adoption or the rollout?
Yeah, it's a good question. It's hard to say. I think there's a level of hubris out there that's probably not widely. It's probably difficult to measure in terms of. In terms of we think we're doing everything perfect and right, and everyone else must be wrong. So I think the regulator thing is going to be hard to predict, but I think it may be easier than what we're anticipating. But I think the hard work is actually coming up with a solution, that the actual engineering solution. But I don't, it's interesting. I don't know if it drives a net competitive effect. I do think the states in the US, seeing one state kind of adopt and pull it in, I think you could see some competitive efforts. I think you could see that, because no state wants to be kind of the last one to adopt, especially if it's working really well in some of the first states. Like they want to be seen as kind of forward, but they also don't want to be seen as like, hey, you brought this stuff in and you actually endanger the population. But even what you see going on in San Francisco, I don't think that perception is actually out there. I think they saw, San Francisco make a decision, pull them off the streets pretty quickly. I don't think that was received poorly, or like, that San Francisco was, out of bounds for their approach on that.
Yeah, I agree. I don't think it hurts, definitely. But I do think that so much of the approval for this is on a local or a state by state basis. So I think, even if NHTSA doesn't get on board, I think there's going to be, areas where they can get approval in somewhere in Florida or Arizona or San Francisco. I mean, there is precedence out there, which is helpful. So getting, the broader kind of nationwide approval might take some time, but I think we'll see it roll out before too long. I'm curious too when they would enable like autonomous rides in the Vegas loop. I mean, that seems like the most obvious first case. There's really extremely predictable. Nothing can really go wrong. I wonder why they haven't done that already, actually.
That's why the China thing is very, very important. That's why it is, right? Because China they are one that can just say, okay, we approve robotaxi, anybody and everybody, as long as you follow these rules, just like they did with who can do FSD. They had 4 different criteria for different companies to come in and do it. They could do that if they wanted to. So it's a big deal for FSD if Tesla's at least part of that, right? They're at least part of that solution in China, which many people thought there's so many competition there. There's no way they don't even need Tesla at all. Well, they allow Tesla to get in, be part of that competition.
Is Tesla the first one to do the neural nets approach versus the heuristics?
Yeah. There's this wonderful table that I've been showing that came from Altimeter Capital. And there's this table, there's a 4-quadrant table, and it showed all the different competitors. And the 4 quadrants are, do you have LiDAR and high def cameras, or do you have just vision cameras? And then the other axis is, are you using neural nets or are you doing heuristic codes? The only company that's doing both vision and neural nets is Tesla. The only company that is doing vision only is Mobileye. Everyone else is doing LiDAR plus heuristic code. Now, 2 Chinese companies, Huawei and Li Auto, have said that they're going to do neural nets and that they're going to go to vision, but they started that research about a year ago, but they're not there. So this is the point about there's competition, but they're doing LiDAR. And if you're doing LiDAR, it costs you $150,000 to outfit a car. So how's that going to go viral or, mass scale? And then you still need to go to neural nets and you still need to work on that. And if you believe that you can go neural net and turn it on like that and you don't need the data, then okay, then you may be able to catch up in 2 years. But if you do need that data, you're behind by 5, 10 years or longer.
Yeah, it just seems like this approach allows retrofitting into existing cars as well. So the scale with which it can grow is so much better. And why does LiDAR cost $150K anyway? I know it's the car itself is part of the cost, right?
LiDAR doesn't cost $150K.
No. But that's what I think that's the number that you use because it's the whole expense for running a Cruise or Waymo business, because people don't realize is that they are basically teleoperated. You have humans that are physically watching these things, and if they get into trouble, then they drive them like a joystick.
Getting to Xander's other point, and I think what you were asking with the original question though, Herbert, is this China thing a big deal? Remember the one data point we have from like 18 months ago or something was they said that the take rate in China for FSD was like around 1%. So we basically call it 0. And the fact that, as Xander said, it is backward compatible. So all the existing vehicle sales that you've had in China, well, now there's over 1 million vehicles that you can sell FSD to, plus all the new ones being sold each quarter. So it's like only upside to earnings. And that's why I think it is a big deal and something that needs to be modeled out separately. But I think most Wall Street firms aren't really doing the level of detail on the modeling to look at those kind of geographic take rates. And it's it's a very big deal for that reason. Now, it's not going to all of a sudden. I think you're not all of a sudden going to have 20% Chinese take rate in like 2 quarters or something like that. It's going to take some time. I mean, I've been trying to find social media of people who've actually subscribed, and it doesn't sound like it's actually been activated yet. So I think there's still a little bit of wait and see about what is actually happening here. But it's definitely a big deal, and something that's going to be only building and growing in importance over time.
Matt, isn't it apples and oranges though? I mean, take rate, they didn't have they still don't have FSD beta. So are we? I mean, it looks like they had like a version of enhanced autopilot and lane keeping. So it's I don't know, it's hard to, I think it's hard to compare that versus the full FSD beta release in North America.
But that's the point, is that like you essentially had 0 sales of FSD in China. So all of a sudden now you will have some number greater than 0 sales on those existing vehicles. That's one of the things that I really loved about my investment thesis back in 2018, 2019, when I first got into Tesla, was whenever they solve FSD and get it better, like, okay, you missed on your first pass of selling FSD to the customer, but you can keep offering like indefinitely. And that some portion of those people will opt for an upgrade. And when your rate is 0, that's only upside going forward. And so that's why I think it is a big deal that that they haven't, that it is finally being offered now.
Yeah.
All right, let's talk about the Elon effect, right? And we have covered a little bit of this topic a little bit earlier, but it is kind of surprising, don't you think? Like that he has come in and he has focused onto Tesla and he's making massive changes, incredible earnings call, and clearly he was, he had made those changes before the earnings call. Of course they did, right? A lot of these decisions. I guess what I'm saying is that because of the Delaware lawsuit that happened, and it invalidated his compensation plan, many people were going, "Oh, that's it." Why would he be interested in focusing on Tesla at all? And then some people are saying, "Well, the reason he's focusing on them is that he wants to win that back, and he wants to get the voters to vote for him and get that back." But at the end of the day, it's good that he's really making massive changes to the company now. It's very good for us, and we need him to do this. What do you guys think about his impact and what he's been doing and what he's about to do in the next several months?
I think he's a fantastic capital allocator, and I think about what he does with staff all the time. He comes in, he prunes the tree, and he's going to keep cutting until he goes too far, and then he'll hire some back. That's what he always does. So I respect it. As a shareholder, I look forward to Q2, to see that the impact. I think it's going to be immediate, and especially with that inventory that's out there that was stuck. I think to your next question of the surprises, I think we could see a margin bottoming played out in last quarter, and maybe a small climb starts coming back.
Other comments from you guys? The Elon effect?
I can weigh in. Again, the comments on X are interesting in terms of being outside the company and thinking better the inside of the company, and just kind of reading headlines and kind of like just shooting from the hip. I can just tell you, just if you're in a position and you're a senior executive in a company and you have responsibility for people, you have responsibility for a P&L, you have responsibility for the direction of the company, and you go to sleep with that weight on your shoulders and you wake up with it every day. And every day you have to leave your phone on because if a factory's down, there may be some critical decision that you have to make. I think once you're in those shoes, I think you can look at these situations differently. And again, it doesn't mean that you can't criticize the decision or you can't ask a question about the decision. But I think to kind of go beyond, like, I think I know better and I would have done the following. I think we need to see, and he's not going to come out and say, here are the 3 chess moves I'm making with my supercharging team, with this team, with that team, because it's going to lead to this. He's not going to do that in any proactive manner, and certainly not with the media. And Tesla does not have to respond to every single media report. That people think they have to respond, like they need a PR team to respond to every media report. Apple doesn't do that. Many companies don't do that. You don't have to respond to every media report. But it is, there's been a number of moves that have been made that you can kind of double click into in the last 30 days that I would say there's just a higher frequency, like, just the whole restructuring of the FSD offering and how it's being rolled out. Obviously the major headcount movements in the company, I don't think they're done. And it may be more than 10% when this is all done. I think the WARN notices have to play out. Then you can see what the full implications are. And I think he's going to leave that window open. He may cut next quarter too. We'll see. But he's acting with purpose. He's acting. He's acting with the kind of speed. By the way, I said this on a speech earlier. Tesla really doesn't have a lot of domestic competition. It's really, honestly, the Chinese and the Koreans, and they are absolutely ruthless when it comes to OpEx and expense management and speed and moving with speed. Like that's the whole foundation of working out there. Is everything's really, that's this foundation of speed, moving quickly, making quick decisions, and honestly being quite ruthless with some of the things you have to do. And again, it's no disrespect to the people involved. It's more about just understanding who Tesla is actually competing with. The Chinese and Koreans, they work nonstop. They work through the weekends. They are going at a pace that we have to be careful of in terms of even our national security as our country. Like China is now the greatest exporter of vehicles in the world. Like, what does that mean? What did that mean during the pandemic when they were the greatest exporter of medical equipment and drugs and so forth? So I think we have to be careful about this, but then we have to understand who we're actually competing against and how they actually operate and what it's like to be on the inside of one of these companies and having to make these decisions. As a shareholder, I was really surprised at, and again, I don't look at so much the day-to-day stock reaction. I think it's kind of a miss, but I was really surprised that the day that these reductions are announced, like the stock is selling off, 1.5%, 2%. Again, he's literally getting the company fit and he's getting it set for the next kind of move. This isn't like things are closing down and there's it's directionless. It's more of like, no, we're going to trim this OpEx. We're going to be much healthier on the other side of it, and we're going to redirect it. We are transitioning to being an AI company. Just really surprised at the reaction of the stock. It was bizarre to me.
Mm-hmm. Let's hear more from you, Matt. Tell us about your kind of investment thesis. You're thinking about Tesla and what you're looking forward to in the future.
Yeah, I mean, I think we touched on a fair amount of this at the beginning, but the upside with AI is so real. I mean, this has been a topic I've been following for maybe close to a decade, and now it finally is having its moment in the sun, where everyone is excited about it, and the tools are starting to be really developed to enable some really life-changing changes to the way that we live our lives. That's a nice tautology there. But these changes are becoming very real, and I believed in the power of this disruption for a long time. And if you look at a lot of the AI companies out there, whether it's Facebook with what they're doing with Llama or OpenAI or any of the other companies out there, they're all competing in this one super crowded LLM space right now. You look at what OpenAI was doing, like ChatGPT-4 was this massive step forward, and I still use it. I'm a paid subscriber, but now Facebook's basically just giving it away for free, and so you can get the same performance essentially with Llama 3 for free. And so, what's the business model there when people can basically, why am I paying $20 a month when I can just open source the same thing to help me get all the same functionality? And obviously, it's going to continue to get better, and I think these companies are definitely worth something, but how they kind of monetize is a very real question that like I can't get my head around, like how OpenAI can be like a $50-100 billion company, let alone any of the other startups that are kind of competing in the space. You look at Tesla on the other hand, and Jeff alluded to this beautifully, where they've got like the lowest cost to manufacture a car, and then they've got the lowest sensor suite in terms of the bill of materials for the actual FSD, what you need to enable FSD in that car. And then they've optimized the chip itself to have the lowest power draw, so that your overall vehicle efficiency in terms of watt hours per mile is like just drastically better than anybody else. And then if you just add the last piece, which is actually solving like truly autonomous driving, level 4, level 5, where like you can unlock the robotaxi business model, then the math becomes really easy. It's like, okay, I already know what my vehicle efficiency is. I know what some comps are for pricing on the top down like pricing model. So then a math nerd like me can go in and just like build a model and be like, oh, this will print money, and nobody can compete with them because nobody can build a car cheaper, nobody can run a car more efficiently, and nobody has an inference chip which is nearly as efficient as what Tesla has. So like it's like very easy to see how significant this opportunity is, and that's why I'm so optimistic. Like that, it's just very clear how this is going to play out, and it has been clear for like 7 or 8 years since Autonomy Day. It's just now that we're finally at the stage where I think the pieces are going to start coming together. But people still are just not believing it, and they're like, all right, well, I'll invest in like I don't know Facebook because like they're investing a lot in GPUs, so those have to be good investments. They might be, but I can't get my mind wrapped around how that actually pays off. Whereas Tesla is like very clear cut and modelable, which I love as an MBA and a finance guy.
Gosh, I'm gonna take this clip. I'm gonna move it to the front because you guys left me hanging when I asked that question beginning. This is what I was saying. And then
you just gotta warm me up. All right, let's have a little conversation first. We'll get into it.
People who listen to the beginning going, Herbert's like crazy optimistic. He wants to get the company to be revalued now when there's no revenue and earnings. And I'm like saying, why is OpenAI worth $50 billion?
Well, this is the thing where like people talk about like trailing earnings and like, oh, like Tesla's pretty pricey at like a 70 PE or what, I don't even know whatever the current number is. And I'm like, that's completely irrelevant. We were like at this moment right before the inflection point of all this like AI investment actually paying off. And if you're looking in the rearview mirror at like trailing earnings and like the automotive business, which I'm not saying it's not important. I model this stuff very carefully, and there's very real concerns around all that stuff. But if you're invested in the company because you think they're going to sell like 1.9 million units this year rather than like 1.8, like you probably shouldn't be invested in the company, which is I think basically what Elon was saying. That the reason that I'm so optimistic is because I've done the math on this opportunity, and I think it's so wildly misunderstood, and I don't think it's like this fantasy that there are some people that say like, oh, the regulations are going to be harder than solving autonomy, like all this stuff. And I'm like, if the technology works, if it will get me from point A to point B with like reasonable comfort, and it's safer than a human, and it's cheaper than driving my own car, like I don't think the regulations are going to be a roadblock that has any sort of staying power. So that's why I'm so optimistic.
Wonderful. Thank you for joining us, Matt. Appreciate this. Thanks, everybody. Follow us. This is Cyberbulls. We do this every Friday. Talk to you soon. Bye, everybody.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.